Hello friends and welcome to my YouTube channel Simply Stocks, and today I'm going to talk about Havels which had a very bad quarter, the last one, but the stock looks very attractive at these levels. Let's understand what is going on with the company and what you need to do. So let's get started. First of all, a disclaimer that this is not a stock recommendation. People taking any position into any share that I talk about should do that with their own due diligence and research, and I'm not in favor or against any company that I talk about. Now about the company, Havels was established in 1958 and they provide house improvement and consumer durable products. They are leader in water geysers, wires and cables, and they have very good management with very good integrity and pedigree. They entered into the AC business with the acquisition of Lloyd consumer business. Lloyd Electric sells a lot of ACs, and Havels now own Lloyd Electric. So a lot of business from the summer market is also coming to Havels through selling ACs. Before that, they were into selling products which are very popular in winter season like geysers, heaters, etc., or blowers. They also provide fans, LEDs, kitchen appliances and water purifiers. So Havels has become from a wires and cables business company a totally different consumer oriented business in which they provide consumer durable products rather than only wires and cables, although they are market leaders in the latter. They have operations also in many parts of Africa, in Asia, and different parts of Europe, including UK. So they have also operations in Australia and New Zealand. So it's not that Havels is only selling their product in India, they are globally recognized and selling their products across the globe. If we look at the financials of the company, the results of the December quarter has just come out, and they had a drop in sales by around 10%, and the profit although went up by 2.5%. But if we look at the operating numbers, the operating profit fell by around 12 to 15%. The lower taxes helped the company's bottom line, and eventual net profit was higher than previous year's quarter. But the results have not been good. Although the return on equity at 20% looks very nice, although the operating profit margin at 12% is not that great either for a company which are into the consumer durable business. So looking at the results, it seems like that the company is going through a very bad phase in terms of its business, and probably this is primarily because of the kind of economy that India is currently facing, with the lesser number of homes being built, and there is lesser need of home improvement because people are not going for vast changes in their homes or improving their homes with respect to lighting, wires, cables, etc., or buying new products. People are looking to save with the kind of economy that India is going through. If you look at the performance of the stock, then the stock performed well over the last couple of years, but the numbers have been really subdued, and we have seen the stock fall over the last 2 3 months. But apart from the last 3 months, the stock has remained robust above 800 rupees for a longer period of the last couple of years. Currently, the stock is trading at around 650 660 rupees, which is very attractively priced. There has been a sharp drip in sales, and that has really spooked the markets, and that's why the stock has fallen so much. Why I believe that it is a buy on decline and one should go for it is still a market leader. So one needs to understand that in wires and cables they have the leadership, although there are other companies, Polycab Wires and so many others that are into wires and cables. And also one needs to understand, when I was talking about auto ancillary and auto companies like Maruti, etc., that whenever there is a downturn in any sector, so for instance in this consumer space of wires and cables, then the leader of that industry takes more market share. Why is that? This is because a number of companies would sell their products at lower prices. When the products will be sold at lower prices, then people would look at the market leader and look at the quality of that product as the best. And when you are getting that product, say before you were getting it at 100 rupees, now you're getting it at 85. Yes, a lower quality product you might get at say 40 rupees, but a very good quality product, or a market leader selling its products at 15% discount is more viable for people. And that's why I feel eventually when the market turns, eventually when the economy turns, people would come to know that Havels would have taken more market share out of wires and cables business. So the future growth looks very imminent, and it seems like it will outperform once the economy recover. So you need to buy at these times of difficult economic periods, not buy all, buy a little bit, 10-15%, and look for results in the next couple of quarters, and then look at buying more. It is a no debt company, there's zero debt whatsoever, and this is really good with the company, and the valuations are very attractive currently with the stock. So, what needs to be done? I believe that on major declines, even from these levels, this is a very good buy. So, if the stock goes to 560, 550 rupees from here over the next 6 months or so because of another quarter of bad results, then go ahead and buy a lot of Havells. So, why I am saying this is the company has a very good pedigree and track record. Over the last 7-8 years, it has grown from a micro cap company to a mid cap one of 30-40,000 crores, and had enjoyed very good period during the 2016 to 19 years. Even when the mid and small cap business says across the board on the NSE and BSE were falling, Havels has remained robust and have performed really well. Keep track of numbers, keep track of all the happenings at Havels. Maybe it is a structural problem and this will continue, so you need to have an understanding totally of what is going on with the numbers. If there is a major issue and it cannot be readdressed very quickly, then do not get into the stock. Otherwise, if there is an issue with the economy and if economy recovers, the numbers will improve, then go ahead and buy on declines. Have a good 6-7 year time frame, because an economy downturn to recover may take 2 to 3 years. So after that the performance will really pick up. So have that kind of a time frame, and try to stick with the stock and buy on every decline if the numbers keep on improving. It can definitely become a multi-bagger even from these levels, the levels of around whatever market cap that it is currently residing at. It can easily be a 1 lakh or 1 lakh 20 30,000 crore market cap with the kind of business that Havels is into, because they are not just selling wires and cables, they are into geysers, they are into heaters, now home accessory, kitchen accessories, water purifiers, etc., and of course ACs with the Lloyd business. So their business has expanded and their business is globally. So if global economy also picks up, then Havels would be a very good play in that as well. And yes, of course, have only less than 5% of your portfolio invested into such stocks which are mid and small cap, and try to ride the tide at the moment. So this was my video on Havel. So please like and subscribe my channel, hit the bell icon so that you can get my videos straight away when I post it. And kindly help and support me through Patreon. Even a $2 support from you would help me, and it would go a great deal in making the channel here on YouTube better. Thanks a lot for watching.